Mike, to you, one of my favorite quotes was out of your note this morning.
Okay.
Powell often plays the part of the stern withholding dad to investors who always want a later curfew and more gas money. Did that happen today?
You're sharing our internal
well, it was
dialogue.
such a good quote.
Oh, thanks. Well, actually, I do think the market was braced for that kind of response. They're used to him saying, listen, don't get used to this leniency here because this is only this time only. Look, we got an as-expected move from the Fed, and the S&P was exactly flat. Isn't that the way it's supposed to work? The fact that we're surprised that it didn't work that way, I think the market is taking his press conference comments as a little bit of two ways to win here. The only way we're not going to likely get another rate cut in the market's mind right now is if the economic numbers really get a lot better and trade all of a sudden lifts as a big overhang. So that seems to be a bargain that the market can live with right now. Again, I'll reiterate what I said a few minutes ago. Sometimes the next day there's a whole rethink and we all of a sudden decide that it wasn't as good as we thought in terms of the Fed move. But I do think right now the market was braced for that kind of stern response, didn't quite get it in the press conference, and that's probably why a little bit of relief. But by the way, it was mostly just banks up today. Most stocks were down. So I do think it was a heavy response, but the market really took it in stride.
Josh, you correctly called that the market would recover from down 200 plus points on the Dow.
My hedge fund launches tomorrow.
Very good. And lots of capital will flow in, no doubt. What about from here for the rest of the year? If we only get this one cut, we don't see further from here. What do we need to see some other big macro factors to support the market?
So that would be an impossible question to answer at any time by anyone. But what makes it even more impossible is that I feel as though the trade issue is so binary. So I can lay out two scenarios for you. One where there's an agreement and one where there isn't. And I think you know exactly what I think the result would be based on either of those. So I want to get back to the banks, though, being the first group to turn. I do think that that's hopeful. And I think when you look at, like, for example, the intraday action in the KRE, the regional banks, look at like JP Morgan, which I own, new all-time high today or close to. Why? Does anyone think that another 25 basis point rate cut is going to do anything for example, net interest margins? Absolutely not. What it's a signal of is that big money thinks that what Powell is doing and dragging, frankly, half the voting members with him is extending the cycle. We get another 4 quarters of expansion, maybe 6. That is what the market is telling you when it takes JPM up to another record high on the heels of this rate cut. It has nothing to do with yield curve. It has nothing to do with how much money the bank's going to make on lending. It's just all about, okay, they're going to save the cycle.
You also priced out some certainty of cuts, right? Which I think the banks would rally on if you didn't think we're going to zero. That's for sure.
So Jeremy Siegel, and Powell said as much. He said we're going to act as appropriate to sustain the economic expansion. Is that bullish for stocks?
Well, it is, but I think he has a lot of headwinds. Look at the projections that we saw for the Fed funds rate at the end of the year. 5 members said, I don't even want to cut today. Now, only 2 dissented, but 5 in the committee said no cut today. Another 5 said this is done. This one. 10, therefore, only 7 thought one more cut would be appropriate. So really, the majority of the FOMC is for not doing any more at the end of for the end of the year. The next 2 meetings, I don't think that's particularly good. I'm listening to term structure. I look at Fed funds and the 10-year is still inverted. We still should bring down that Fed funds rate at least another 25 basis points. I agree completely with Bullard, his dissent on 50. We got to normalize the curve. I was a little disappointed in the FOMC projections.
So why is Bullard the outlier then? Why aren't more having the same view as he's got?
Well, he has been the president, the member that has been most concerned about inversion of the curve. He's been sitting on that committee for years. He said, you know, back in the crisis, they told me inversion didn't matter. Back in 2000, they told me inversion didn't matter. Fool me once, fool me twice. You're not going to fool me a third time. And, you know, he said we've got to right that curve. And I think he is right. And I think
Jeremy,
that's why I voted against it. Yeah.
Jeremy, it's Josh Brown. Looking back at previous inversions, the average rate on the 10-year has been like 7%. I'm not saying like this time it's different. Ignore the inversion. I'm just saying like when you're at the zero bound or you're close to it and we're this low globally, can't we allow for the fact that maybe there will be several crossovers back and forth before one actually matters, and maybe there is some nuance that's worth paying attention to?
Yeah, certainly that's true. But, between 6 and 18 months later, there's a big slowdown that actually was a recession. Now, I don't think there's going to be a recession as a result, but if the Fed doesn't lower that rate, I think we're going to have a more significant slowdown. I mean, I know some of the recent data has been decent. We're barely going just at 2%, 1.9%. 2%, but you get that news from FedEx about seeing the slowing internationally, and even Powell mentioned about what's going on in Europe. You begin to wonder about how much we can stay at 2%.